Again, we've heard it, we know it, technology is constantly evolving. We've just heard from the previous session about all the infrastructure that underpins that. So for this session, what we want to hear, and again, an incredible esteemed group of panelists, about why they think or what they think a future fintech company is, and importantly, whether countries like Georgia or the Middle Corridor region is appealing to them. And I think it is. So this session, this discussion is more about the business perspective of fintech. What we want to hear and see is real case scenarios. So let's explore that with founders and policymakers to see the boundaries and whether there is a pitch, a case for rising economies to compete and capture the future financial unicorns. Again, like my previous panelists, I'm not going to go through their biography. You'll see some of it up on the screens, but you can also see that in the conference literature. Okay, let's start. Ladies and gentlemen, please welcome our first guest, Nadia Tornava, the acting governor, first vice governor of NBG, of course, the National Bank of Georgia. Thank you. You got your, yes, you're in the middle. Nadia has been the first vice governor and acting governor of the National Bank of Georgia since June of 2023. That your seat's not even hot then, June 2023. She's been a board member of the board of the bank since 2022. Next up, ladies and gentlemen, Ben Zhou, co-founder and CEO of Bybit. Come on up, Ben. Bybit, of course, you'll have heard of it. It's one of the top 5 crypto exchanges that's grown significantly since it's founded, only in 2018. Next up, Pedro Vieira. Come on up, Pedro. Pedro is at 500 Global partner. What do I say about you, Pedro? Pedro's a scientist, turned tech founder, turned investor. I also believe he's a good friend of Georgia. Actually, what is great also to have Pedro is that he's got deep experiences on both sides of the table, as an operator and as an investor, which will be invaluable for the discussion. Salim Danani, come on up, Salim, the big boss and co-founder of Pave. That's the digital solution built for a new financial world with programmable money and regulated digital assets. And last but certainly not least, Andreas Glana. Come on up, Andreas, legal partner at MME. Andreas advises international tech and financial market companies with a focus on fintech, Web3, DLT, blockchain, decentralized financing or finance, and NFT and gaming. Actually, you've been listed as a global thought leader elite and a global leader in those fields. So, lady and gentlemen, a real pleasure having you with us. Let's start with this. Normally I would start ladies first, of course. That's how I was raised. But Nadia, I'm going to come to you in a minute. I want to start with Pedro. Can we just paint a picture of what sort of trends that you see related to these middle corridor countries when it comes to investment in fintech companies?
Yeah, I mean, the trends are very different depending on the countries you're looking at.
Yeah.
If we look at the region as a whole, definitely you see a lot happening in digital banking, digital payments, which are, I guess, core to everything else we do. But we're starting to see also a lot of interesting things happening in ag tech. We'd like to see things happening more in insurance tech. And at the end of the day, as someone said in the previous panel, everything is about fintech these days. Everything is about fin and everything is about tech. So for us, we are a very early stage investor that works with founders from many different backgrounds. What really matters is what we're building or what they're building, does it impact people's lives? And it doesn't matter if we call it fintech or fin or tech. And so in that sense, the trends are all there. Agriculture, resources that need more access to capital, SMBs that need more access to capital, final consumers that need better insurance solutions.
Okay, sorry, I'm going to stay with you because you talk about the region. I mean, you're a good friend of Georgia and the entire region. And you deal closely with the Venture Capital Fund, correct? The 500 Georgia.
Exactly. And
in fact, you lead the acceleration and the investment initiatives in Eastern Europe, the Caucasus, Central Asia, known as EECCA, via that fund. So just, I want to ask you, why this region? What's the attraction
Yeah, so our company, 500 Global, has a series of funds, a family of funds, close to 30 funds around the world. In the investment thesis, the core of the thesis has remained the same, which is there's a lot of emerging markets that are underserved, where there's significant amount of talent, usually a lot of tech talent, that doesn't have access to all the capital needed to grow the ventures that they're trying to build, to serve the region. So Central Asia, Caucasus, Eastern Europe is a region where we see that there's tremendous of this potential. And now we have an accelerator here and a fund that will come with it in the future.
And Natia, I mean, I'm going to come to you now because I'm just wondering why, from your perspective, why you think rising economies, developing economies, and these countries and regions, why they're appealing to fintech companies of the future. I'm just wondering what it is they have to offer.
First of all, let me say that, like if we are speaking about the example of Georgia, we position ourselves as a hub in many ways, in many fields, starting from being a hub in logistics, in transportation, energy, communication, tourism, and of course, nothing surprising about our desire to become a fintech hub as well. And I think that we have all preconditions for that. But if picking up one particular thing, I would like to echo someone from the previous session who said that it's all about regulations. Probably I'm speaking a bit from the regulator's perspective, forgive me that, but I think that all kind of incentives could be created, especially when we're dealing with a country with such interesting geopolitical location. A difficult one, but very interesting and attractive. So from the regulator's perspective, I would like to say, reshape your question in a way, why and what role the regulation can play in making someone to invest in financial hub like Georgia is or would be. And we, as the National Bank of Georgia, we answered that question several years ago when we have chosen the open regulatory approach to pursue, which became a driver and enabler for development of fintech industry in Georgia and probably making attractive our Georgian financial market for global fintech industry. And I would like also to say, and you also mentioned that during your introductory speech, that the environment that is attractive for fintechs and fintech investors, this is a sound, collaborative, transparent, and this is something we aim at, and we are doing our best to create. Just to list few I would say, offer to the market participants. First of all, here in Georgia, we are offering to market participants, to fintech companies, fintech investors, a kind of single window when you could get any kind of license or permission related to financial services under one umbrella in NBG, which is not always the case in other countries of the region.
No, yeah.
So it makes it easier, it eliminates all kind of misunderstanding, risk of some, let's say, bureaucratic procedures between different agencies. Then we, as a response to the variety of business models that are presented in the global fintech industry, we're also offering different type of licenses suitable for different business lines and different, let's say, business models. First of all, recently we introduced a new type of license for the fintechs called a platform. We have already 5 applicants who are looking for this type of license, which enables fintechs to, to have an access to data democratization, to test and to develop new innovative models and so on. Another important and relatively novel regulation is registration of virtual asset service providers. These are like market participants from crypto industry, from crypto market. This is a relatively new concept, but very much in demand. Its scope is about registration and AML, CFT supervision of crypto industry. And we have about 30 different companies that are interested in getting that kind of registration. It's about building a trust between them and financial services, conventional banks, to allow them to test the new products in a more safe environment. Last but not least, we introduced a couple of years ago the license for digital banks, and we have here Paysera on the previous session, who are the first banks, together with the Georgian partners, who got this license of digital bank. It's more sophisticated regulation, which let's say, requires highly innovative business model from the bank, from the digital bank, but at the same time it enables banks to become a full-fledged bank also, and to enjoy a more relaxing, more, let's say, liberal authorized capital requirements in the beginning, at least. So altogether, it's all about, let's say, making incentives, making very flexible, transparent, responsive towards industry needs framework. And what I would like to say that at the end of the day, fintech investors, they are looking for companies that are disruptors, that are testing the new products, but the companies and investors should be able to test those products in a safe, stable, predictable environment, which is much in demand these days, especially. So this is our major goal and ambition.
Okay. Selim, can I ask you, what is it you look for when you look at a fintech startup?
Generally? Sure. Like, I think fintech is embedded in every part of our lives, and I think this is something that was echoed multiple times in the last panel, again on this panel by Natia. And for us, I think that you're looking at core solutions that you're solving for. And that's the most important thing. And I think if I just parlay that question and kind of link it to the last one as well, right, that there are things that are really important. Like, why is Georgia so interesting when we look at financial services? And, people may think that this panel is outplaced, or the sessions on fintech are out of place when a lot of the dialogue is on energy and transport. But actually, it's completely intertwined. Right? You need to have the right financial infrastructure as you look at building the roads, the railways, the energy pipelines, because you need to finance all of it, right? And a lot of people will constantly face those blockers at the last mile. And I think that when we look at Georgia, it's taking that often what you'd consider or see as a last mile problem and bringing it to try and solve it up front. So where do I see the opportunity if we look at fintech? And I think that there's a multitude of different regulations, and I think it all culminates in solving these major big issues that we see, or big opportunities, I should say, rather, in the market. And I think that, if you look at the financing side, if we look at on the trade side, if we look at if you're creating a financial hub, it's about saying, how do we attract more capital? How do we attract more talent into the market? And how do we then start offering opportunities for businesses and take these resources in it as well?
Andres, and then I'm going to come to you in a minute about how you choose the parts of the world that you go to. But Andres, can I just and we're going to talk to you about regulation, but can I just ask you, is it right then, is there more of a benefit for fintech startups in developing compared to developed economies?
Well, it's again the question, is it all about regulations? Yes and no.
Right,
And,
yeah,
I disagree. I think it's not all about regulations, even though my focus is on regulations. It's also about building up an ecosystem, having service providers being able to offer the services you need, having the people building the technology, but regulations is key. And then the question is, which regulation is the right one to choose? And there we see a development having some jurisdictions choose to have a very light regulatory path. So some others choose to have no regulatory path and basically just allow anything without a license. And some others decide to go on a more highly regulated but secure framework. And then the question is, where do you fit in? And I believe the strength also of Georgia is now to build something up that is stable over a longer time, which probably, in my view, should be not the light regulatory regime necessarily, but one which is stable and which is also in line with other regulatory regimes. Okay. And maybe I can also address a bit the two types of regulations that we currently see in the market. For the past 6 years, most jurisdictions in the fintech space, which kind of wanted to build up a brand, we heard Singapore, we heard Switzerland, there are many others out there which also have a certain brand in that space. They built up regulations for themselves to serve as a hub to attract businesses and provide services out of that jurisdictions. But in the past years, in the past 2 years, we've seen the development that we get more market access regulations in place. So, and those, for example, the European Union with MiCA is a typical market access regulation. So if you want to provide your services from Georgia, from Switzerland, from Singapore into the European Union market, you need to comply with those regulations as well. And then, at latest, then it makes sense that your regulatory regime in your home jurisdictions is very similar in kind of on the level of regulations with other jurisdictions that you can comply with that easily.
And we'll delve more into regulation in a minute, but I just want to stay on the topic of that choosing areas, or sort of like we've been talking about Georgia, but Ben, operating one of the world's largest crypto platforms, I mean, I've got to ask you, how do you choose the jurisdictions that you want to operate in? Because as a layman, it must be a minefield out there.
Yeah, so we operate in over 156 countries.
Wow.
And when we pick the licensing, it's very strategic. First of all, when a lot of people ask me, Ben, how do you view regulator? And it's a big word. I think many different countries take it, as far as crypto, it's very different. I think you have the likes of like US, that's more of enforcement, regulating by enforcement, and for those, we're trying to stay as far away as possible. But then you also have regulators and countries see it as opportunities.
Right.
So yeah, so this is why we're in Singapore, we're applying in Hong Kong.
I'm sorry, they're the ones that you see, where you see the opportunity.
Yes.
Singapore, Hong
and
Kong.
they are more progressive, they are more welcoming. They talk to the industry people like us to come up with the ideas, how can we help, you know. And basically, I think the whole case after FTX, a lot of people view crypto as a scam. We want to work with regulators, actually see us as fintech and as an opportunity. So yeah, and we are regulated in UAE. UAE has been quite progressive in that as well. So we pick kind of the general, you know, areas where we want to place our stronghold. The next thing we look at is how is the licensing structured. For a crypto license, you see a lot of regulators are issuing the license through a different entity, not sort of through the central bank. Where, for example, Netherlands, for their DNB is the central bank, and you see that the crypto adoption rate is very high. Because it's very easy to connect to the banks to actually on and off ramp with Euro to Bitcoin and Ethereum and all that. So we want to pick a regulator that's actually more or less very close to central bank, so we can have the on and off ramp capabilities. Because at the end of the day, if you get the license from crypto and you don't have the bank support, why do I need a license, right? I can just kind of still be operating online. Actually, we have the license in Kazakhstan, where we see struggling between the regulator and central bank. There's a little bit of conflict, and we're actually having bank issues there. So these are the few fundamental things we look, and of course, local talents and how supportive local policy is and all that.
Hey, are you here in Georgia?
Sorry?
Are you here?
First time, I'm exploring.
No, exploring.
Yes.
Okay. Could it be a future destination for you?
Yeah, I think so. I think after this trip, I think the overall policy is very straightforward.
What have you seen that you like, that is favorable?
Well, the regulator is the central bank. So I have very strong faith that maybe at some point the banks will be supportive on and off ramp. And for us, we have a pretty big influence in the whole CIS region. We want to leverage Georgia as a hub to influence the whole region and be able to do on and off ramp, issue maybe even crypto card and things like that. So I think this could be very strategic for us, yeah, as long as we have the bank support. Yeah.
Okay, that's good news.
Yeah, with the meeting, can I say that before?
Pedro, Salim, just briefly, what's your take
Yeah, I
on
mean, the
crypto?
way I see it is a big opportunity for Georgia and some of the other countries in Caucasus and Central Asia, but Georgia in particular, is the fact that it's a small market is actually an advantage. The proximity that you can have with the regulator, the proximity that you can have with the top CEOs of the top companies as a young entrepreneur allow you to test many different things. And so we always try to look at this as a lab where the ventures can test their things in a secure way and then help them scale from here. Now, for that to happen, what's important is that the regulation or quasi-regulation or whatever we want to call it is in place to allow for that. And if you allow me, I think a lot of the discussion in the previous panel and in this panel already is about regulation as a controlling mechanism to make sure that everyone is following the rules and whatnot. But when we're talking about following the rules, we're talking about following the rules for a future that we know of. But when we work with founders like we do, that are reinventing the future, that are thinking what might be, how are you going to regulate what might be? Right? So that's why concepts like sandboxes that are so relevant, it's so important for fintech, but for other verticals too, should be in place with relatively flexible rules, if you will. But the challenge here is many countries having their sandbox, and each sandbox ends up having different set of regulations. So it's like we're back to the regulation silos, right? So a challenge, and there's a lot of regulators in the room, and there's people that can influence regulation here. It would be interesting to see this region, for example, having a shared sandbox, or having a set of sandboxes that at least have a set of shared guidelines that allows a company to start in Georgia, but try their things fairly easy in Armenia, Azerbaijan, Kazakhstan, Uzbekistan. And we're already seeing some companies trying to go cross-border and having their growth stifled by this sort of barriers. So I think we're at a really good time in the market. I think that Georgia is in a really strong position to play a role of connecting the dots, of connecting these different markets. And we, with our program, what we're doing is already a demonstration of that.
Yeah.
We're working with founders from different countries in this region that politically may be in conflict, but you see the technology bringing them together.
Wow.
And so we would love to see more of that happening, and we're here to help.
Yeah, and if I may add on that, on the sandbox topic, which I think is a great tool for innovators and companies to try things. And so I really love the idea to have like kind of a jurisdictional interconnected sandbox. But I think it's also important to keep in mind, it's also a great tool for regulators to learn. So a properly monitored sandbox is like the best playground for a regulator to understand technology, to understand risks that new business models bring. And so it's, I think it would be a good opportunity to see as a regulator as well.
Yeah, for sure. Look, I think one of the bits that's kind of we're talking about here is harmonization, right? Like, and it's kind of been a common theme. Like, we want to make sure that the regulator are not two separate regulators. We want to make sure that regulators are pushing innovation as well. And like, you can't innovate what you don't know. And I love that phrase, actually. It's a really good one. And I think that one of the things that's, if we kind of say like what's really important is that the financial world, no matter how much we want, whether it's blockchain, whether it's, traditional financial services, it's all interconnected, right? Everyone, looks at harmonization as a flag or a badge of credibility, right? Whether it's correspondent banks, whether it's other central banks that you want to go and operate in, even passively, they all look at these things. So that's something that's really important. I think when we look at the market here and we look at blockchain, and I think there was a really interesting kind of piece on digital assets, they have innovated in the pieces and the parts of the economy that haven't needed to be regulated, like the title infrastructure, for example. And this is going to create the next level of innovation, right? And this is what makes it really, really, really interesting for your portfolio companies and players coming into the market to like really build that ecosystem up. How do we then merge what's seen as almost like a quasi, new financial market with the traditional asset space and the traditional market? And I think that you're going to start seeing these hubs and these smaller markets because they have more to gain. And that was Frederick's point in the last thing, what do you have to lose and what do you have to gain? And there's a lot more to gain here. And if they get it right, it means that you're going to get a lot more capital into the market and a lot more firms, right? Whether it's a sandbox or traditional licensing.
So then, Andres, are these sandboxes, are they the answer to the age-old criticism that regulators get? And that anything with technology, not even this, but anything with technology is 2 steps forward and the regulators are 3 steps behind.
Well, they're one of the answers. Definitely one of the answers for a regulator, as I said.
But
to
why are they
learn-
always behind it? As a layman, why is it anything with technology? Regulators always seem to be 2 steps behind.
They will always be, and they have always been 10 steps behind. I think that's just reality. And with all fairness, I think that's not that bad. I think the question is more how a regulator approaches new things. Do they say, well, it's not regulated, so it's forbidden? Or they say, it's not regulated yet, so let's see how it evolves, and we start regulating when we see it actually becomes a risk for an entire market or for certain consumer groups. And I definitely believe that the second option is the right one. And you start regulating when there is a need for regulation. You don't start regulating just for the fun of it.
Can I just add one point on that? Like, I don't think regulators are always 10 steps behind. Like if you look at they may not put the regulation in place, but what's the role of a regulator? The role of the regulator in many ways is to have stability and consistency. And if we don't have stability, everyone's money goes, gone, right? And that's a big problem, right? And it's not good for politics, it's not good for the stability of the country or anything. A lot of innovation is happening on the fringes, right? If you look at like the BIS kind of initiatives, like, Project Guardian, you look at Project Dunbar, a number of different projects where regulators are collaborating and participating, but it naturally takes time to assess the risks and bring it into. I'm not trying, not defending the regulator here, but just saying that, this is typically, what the process is, right? And you do see these sparks happening in the edges.
Anything that you've just heard in the last 5 or so 10 minutes that you want to add, Natia, or touch on?
Well, okay, so there were very useful let's say, things that I got for me. But I think that one important topic is regarding collaboration between fintechs and conventional banking services, because when we are speaking about safety, security, like predictability of the market, it also means access to the conventional bank finance and building a trust. And I would like to say that, and probably I would underline that, in my opinion, it's a strong advantage of Georgia that we are the country of a very strong banking system. Very advanced, very transparent, not only very, let's say, healthy and profitable, but also very innovative. And I would like to say that over the last decades, our commercial banks, they took a role of leaders in driving the industry of innovation, of digital economy, and etc. And is it good or bad for fintech industry? There are some views that usually fintech industry and traditional conventional banking are seen as a competitors, so fintech should be disruptive. However, I think that having as a partners banks like we have here in Georgia, strong and modern-minded banks, with a strong pool of talents here created, with a willingness to invest in other countries of the region, in particular in the digital services, in a more advanced product. I think it's a great advantage which will lead us, and all of us, I think, to win-win situation, because it builds a trust towards fintechs, and at the same time, it gives them access to the more modern products and digital technologies for the banks. This is one thing I'd like to say. Another thing is that, in my opinion, the stability, continuity, and predictability of regulations in any field, especially in fields that are connected to the finance, it's very important. And the third, last but not least important topic, that we see our role as a collaborators, as enablers, because Georgia is still on the very I would not say premature, but on the initial stage of, let's say, building this infrastructure. That's why National Bank of Georgia, on top of our core regulation approach, will see our role in contributing to development of financial infrastructure. For example, you mentioned here technical sandbox that we are developing together with the IFC support. We just joined the mBridge initiative, which is very important also from the regional perspective. We will do our best to contribute to the development of the regional infrastructure in the middle corridor. And by doing that, we will strengthen our position of fintech hub in the middle corridor as well.
Well, okay, so you may be very interested in hearing what our friends in the audience have. Can you put the poll back up, please? So don't forget, you can keep voting for this. There's the question. What does Georgia need to establish itself as a financial hub, right? And then there's your 3 options. Is there any chance on the screens you can show us up here the early results? I'm putting them on the spot. We should be able to see a percentage of what people think, unless nobody's voted. But register and vote, and I'll keep my eyes on the screen, and we'll wait to see they crop up. Actually, I want to go back to crypto for a minute as well, because I'm curious to Pedro and, well, all of you, just what your thoughts are on crypto. But to you, Ben, what do you say to the still skeptics out there about
crypto?
About crypto, yeah.
Yeah, I think, you know, this is when I still do the kind of a training for all the employees, yeah. Back in 2017 when we started, all the questions they asked me is Bitcoin a scam? and now nobody asks that question. You know, within the span of 5 years, when we started, there was no Web3. We were not being called as Web3. There was no NFT. There was no DeFi. There was no DAX. There was no DeFi mining and all that infrastructure. Within the 5 years, all the technology layered, and now you have so many things in blockchain and Web3. So I think right now when people still think about crypto, they think about pump and dump and kind of gambling behavior, but which is not. If you open up a Bybit app, it has such a variety of functions. For example, we're in Turkey, and most of the Turkish users come and use crypto to avoid the lira drops as an opponent. So we see the adoption rate of crypto actually goes very high when their own financial system is not so stable. This applies also to Brazil, Argentina, you know, all these areas.
Yeah.
And for those clients, Bybit serves as a banking app. They will on-ramp, they will get their crypto, and they use our Bybit Earn to earn a stable yield, just like a savings product, right? And so they don't really trade and do all that. But you have other countries and clients from different areas that do many different things. So I think crypto now, it's a lot more than what the skeptic thinks. And maybe one day it will creep into their daily usage when they see it.
Mainstream.
Yeah.
Pedro Salim, I'm just curious briefly on your takes on.
Yeah, well, I should have bought more when I learned about it. That's my first thought. No, I mean, so I don't know if you know this, but a lot of investors have moved away from the terminology crypto because of the negative perception, and then we talk about Web3. But if you're asking me about crypto as in just the digital cryptocurrencies, obviously that's, okay, now someone stole my thunder. What's going on here? Do you want to talk about this first?
Well, no, just finish off. We leave that on the screen.
I guess
people can keep voting and change your vote if you have a rethought.
Yeah,
a rethink.
if you want to influence the results, now you
Yeah.
can. No, I was going to say, there's a lot of big societal problems that people throw technology at, and then the technology becomes the core of the attention. And people think that technology is the means to an end to solve that problem.
Yeah.
But sometimes the problem is human. Sometimes the problem has to do with societal rules. Sometimes has to do with our human behavior. And in some of these technologies are just a fake conduit to fixing the problem. So one of the things that we work very hard in the early stage of developing companies is understanding if that technology is really needed to solve the problem. This is a little bit of a contrarian view, given we're here all like boosting blockchain and crypto as, you know, the holy grail. I think it's super important, and we've made investments and will continue making a lot of investments in training founders in these technology, in these spaces. But my view on that is that you don't always need it to solve the problem. And so we first try to understand why the problem merits being solved, how much value is there in solving it, how much money can be made by solving it, and then, you know, if you can solve it with crypto or blockchain or whatever we want to call it, Web3, then we'll go for it.
Salim, just briefly, what your take?
I'll try to be brief. But I'll try.
That's okay.
Like the nature of money and value is changing. Like, let's take a step back, right? Like, we all go and put our money into banks. We go to banks because they're regulated and our risk, what's called counterparty risk, is managed. We go there, we say the regulator has put a seal, I trust it, the counterparty risk has been managed. The entire nature of money and value, which is fungible, is becoming non-fungible, right? And what that means is that if you put it into a little bowl and you put $100 bills inside, you don't know who touched which one. Now, with blockchain, you can, right? And this is why CBDCs are important, what James mentioned in the last panel, right? And kind of when we look at the real world tokenization of digital assets. Think of it like fingerprinting, and think of the application this has for anti-money laundering, for risk management. Think of how it has for the fractionalization of larger, unmanageable assets. Think of the letter of credit that you manage that cannot be unlocked. It's dead capital on your balance sheets, for those of you in the room in traditional businesses, right? Where it becomes extremely valuable now is that the nature and way in which counterparty risk will be managed going forward is going to be done by a piece of code, right? And this is going to be akin to a smart contract. And then you have to ask yourself, if this is going to be no longer managed directly by regulated institutions' seal, but a piece of code, what is the nature of a regulated institution? And this is where it becomes really, really interesting because...
Well, but it can be a decentralized stamp.
I think, unfortunately, like everyone, yes, you will have decentralized applications, and I definitely see the future of that as well. But in reality, you're going to have touch points with the regulated space. And at some point, if you look at travel rule, let's take a very good example of travel rule. There are a number of points at which consumers can move crypto around at a certain value threshold before it needs to have a certain level of AML, guardrails, essentially, right? So, like, I think that it's very important to like talk about these things because it shouldn't be seen as some esoteric model, right? It should be seen as a piece of technology that's going to come and transform the way we look at money and the way we look at value more generally.
I mean, the way you describe it now, it's crypto is somehow like the sandbox for the digital infrastructure we're building for digital assets in the future.
I like that, actually.
So it's
But you've got, all of a sudden you're Switzerland all of a sudden. No, but in Switzerland, it's the Crypto Valley, isn't it? In the
great branding.
in the Zug canton. I mean, just briefly, just briefly, how does that work? Because it's correct me if I'm wrong, but it's thriving. How does the regulation and all that work?
Well, I think one thing about regulations, when you build up new regulations or have existing regulations that you want to adapt to digital assets, it's, you suddenly have this digital assets, you need to be able to deal with that. And when we talked about regulations now, we all refer to financial market regulations, but this is one piece of the whole story.
The whole picture.
If you look at regulations in a more broader sense, what you need to do, you need to know what happens in a bankruptcy case if a custodian of digital assets or crypto assets goes bankrupt. Are they fully segregated or not? Is the consumers protected or not? You need to address it in the law. You need to know what are the VAT consequences when you do transactions in digital assets. Are there any? If yes, for which ones? You need to know a whole set of different rules which are new for digital assets. And I think that's what is key to understand. If you build regulations, you shouldn't focus on AML, you shouldn't focus on banking regulations. They are very important, but you need to see the full picture and understand, hey, what do we need to address in a digital asset world to give the certainty for transactional behavior?
Okay. Can we bring up the results again? Because let's touch on those. So this is interesting. So you can all see the question there. So 64%, yep, infrastructure. Incentives is outdoing the regulation, basically. What would we mean by incentives? What would we mean by incentives?
Tax.
Tax, yeah, just tax incentives. Does that surprise anybody or not?
No, not at all.
Not at all. So 64% of the room say we need the bloody infrastructure in place.
The first one's interesting, right? Like, because there's 4 pillars of infrastructure, right? There's open data, there's payment services, there's identity, and there's going to be authorization. And I think in Georgia, like, all of us will go around and we see open data frameworks being put in place in financial services and hopefully more broadly. We're seeing payment infrastructure coming at the end of 2024. We're seeing identity that's quite advanced, and then we see a complete ball drop on authorization. Right, so it'll be really interesting to see how that evolves over time and kind of give that and become regional and interoperable as well.
Okay. Anybody else got anything to add, Pedro, on that? No? No, no.
I'm good.
Pedro, let's just touch on some, they're not generic questions, but I'm just wondering if we're looking at the key drivers of fintech growth. And I'm just wondering, are consumer expectations, are they quite possibly a driver of fintech growth?
Well, definitely, but I'm completely biased, right? As you've heard me saying multiple times, everything here should be driven.
I'm giving
by
you the platform, buddy.
Yeah, it's a softball you threw at me. I mean, everything is driven or should be driven by consumer needs. Sometimes that requires Web3, sometimes it doesn't. I think the important part in this, kind of like bringing everything full circle, is giving the early stage ventures an opportunity and a space for them to fulfill these needs and to understand how to fulfill them in a way that generates value for everyone. And if those conditions are met, I assure you the founders will make worth of it.
Mm. And Salim, can I ask you this as well, because it's part of the topic really, and I kind of mentioned it in the opening speech, but well, I'll wait and see what your answer is. But what type of a company is a fintech company of the future?
It's a big question.
You don't call it fintech.
Yeah,
We won't be, yeah, right, no.
Yeah, you don't know what it is. I mean, it's just part of your life, right? It's embedded finance is what
So
fintech should
eventually
be.
fintech will just...
You don't know about it, yes. You don't, it's just you do whatever you need to do to achieve your goal, and it doesn't matter.
you're solving problems, right? Like I think you're solving a real problem, like in terms of access. You know, Ben talked about a really real world problem in terms of the different markets he mentioned and like the kind of volatility and how he solved the problem. I think that we talk about the programmability of assets and unlocking capital. And that's solving a real problem for businesses, you know. And I think that exactly, Pedro, on your point, like you can get way too easily carried away building esoteric businesses that not really doing much apart from wasting venture money and building great tech. I mean, and that's a big danger that you need to look out for.
Yeah. Here, I'll divert the conversation for something people unexpected. I'm an environmental engineer, right? I was trained in environmental engineering. You know what people spent the most time, like in the 90s, doing? Defining sustainability. Every environmental engineer would spend hours at the university trying to understand what sustainability meant.
Right, yeah.
Was that useful? No, right? Because at the end of the day, what mattered was solving the problems that were, at hand. And so I guess now we're going back to fintech, kind of in the same way.
Yeah, no, that's a very valid point. I like that. We don't have much more time. Ben, I do need to ask you this, because while we've got you, the bloke who co-founded and is the big boss of one of the largest crypto platforms in the world, is there anything that keeps you awake at night?
Hackers.
Many things. Go on. I think for cryptocurrency, the biggest for any centralized agents like us is hacking, security issues. Is to make sure that we're solid proof, that we have so many layers of security. You've recently seen many exchange get hacked, and here and there. Whenever that happens, I call my security guy. I'm like, understand exactly what happened.
Lock it down.
Lock it down and check for me. Yeah. So actually, the mentality of exchange is that you don't expect you never get hacked. Is that you do expect you get hacked, but you get hacked. What is your maximum loss? So you make sure that the maximum loss is very tolerable. Right. So that is the kind of the notch the exchange is working on. I don't think any exchange is working on let's never get hacked. That would be kind of daydreaming, I think, or they have never run actual operations. So I think that's one. And number two is very fast evolving regulatory landscapes. We're in so many different countries. Each country have different rules. Things pop up here and there. I get many dialogues with recently FCA, the French regulator. So making sure we keep on track of what's going on, and really we've started building up our compliance team to make sure everyone is understanding what's going on. Just make sure that we don't lose track of things. I think these two are the major things. And then lastly is that make sure that we're still the innovator in the space. Whenever a new thing comes up, whether it's real world asset or things, we build that bridge and road to connect clients there. Exchange, I see ourselves as an infrastructure play. So we don't create a city, but we take people to the city. So that's kind of our goals here.
Okay. Well, good luck with it all.
Thank you.
Ladies and gentlemen, please, a round of applause for our friends up here. Thank you. Much appreciated, guys. Thank you, thank you, thank you. It's a coffee break now. Yeah, half an hour, I believe, and the coffee is just up the top of the escalators.
Dear forum participants, allow us to remind you that the coffee break for the forum participants is served at the lobby hall. The next
Oh, you're
panels will
welcome.
resume after the coffee
Thank you.
break, as
You enjoyed it.
indicated in
Good.
the forum program.
Thank you, Nathan.
Thank you.